Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, April the 16th. I'm Eric Wilkinson, and you very well may recognize me as the Wolfman from mainstream media, where I've talked about the economic data, geopolitical environments, how those impact markets with some of my market analysis. I do the same thing in these daily market commentaries, but I take it a step further for you all and talk about my option strategies that I implement into my portfolio based on those assumptions I come up with in my market analysis. And I share with you guys a way to spot the best option strategy for any given assumption. That doesn't mean a bullish assumption you're buying a call. Not always. What we do is we look at the pricing and figure out if those prices are cheap or expensive. That determines our pricing strategy. And even further, I talk about strike location and days to duration on what you should be looking for in any given option strategy. So please check those out at protraderstrategies.com. All right. Without further ado, let's get on with the economic data. See what's making these markets move today. Across the pond, we got CPI, final CPI, which was right in line with our preliminary consumer price index at 1.3%. Core CPI, which is going to strip out, remember, food, energy, alcohol, coming in at 0.9%, so right in line there with expectations. Now let's jump back over here to the United States, and we got our own economic data points. Building permits, 1,777,000, expected to be 1,750,000. And last month's number was revised up, albeit just slightly. Housing starts. Now we talk about building permits. You can pull as many as you want. It doesn't mean you're going to necessarily start. Well, we're seeing those starts happen here, coming in at 1,740,000, expected to be 1,600,000. And last month's number revised up by about 40,000 there. So a nice, really nice beat on the street headline number. Nice revision to the back end there on the housing starts. Remember, we were kind of worried about this when we had the Institute for Supply Management number, or sorry, not Institute for Supply Management, the National Association of Home Builders Index earlier this week. Well, that kind of gave me a little bit of pause because those guys were kind of signaling these higher prices for lumber, higher prices for houses. Yeah, it was there, but rising interest rates could crimp some of this housing boom. Well, they aren't putting their money where their mouth is in that regard. It's kind of like fade the trade in that sense, where they're producing houses. They're starting those houses, despite the fact that they're saying they're a little bit worried. So good to see there. That's helping drive this market and Dow Jones Industrial Average to settle at all-time historical highs here, it looks like today. University of Michigan consumer sentiment coming in at 86.5. That did come off just a little bit there from what we were expecting. It was supposed to be, we were expecting about 88, so lower than expected. We haven't recovered since the pandemic. We are climbing a bit higher, but the consumer's still a little bit weary about how this reopen is going to happen, obviously. All right, and the University of Michigan inflation expectations coming in at 3.7%. Now, this is a 6-month to year outlook. Now we're seeing that number really start to ratchet up. As a matter of fact, this is the highest reading we've seen since 2012. So if you guys all can remember back to 2012, we would have expected to maybe even see some inflation happen during the last 4 years. But no, we are seeing the highest inflation we've seen since 2012. A little bit scary for interest rates. As a matter of fact, the banks are knocking it out of the park with their earnings. We saw Morgan Stanley come out with better than expected earnings. We talked about Goldman Sachs earlier this week. As a matter of fact, I talked about Goldman Sachs in yesterday's video, so check that out. That was part of our swing trade setup, so we'll talk about that here in a minute because I did put on a trade for that. So let's get on with the markets and get to my trades. All right, we've got crude oil here, slightly off on the day. Are we topping out here? Maybe retrace back down. We would not like to necessarily see crude oil moving higher, but with all of these economic data points, we saw the manufacturing, we're seeing the reopen trade start to work. People are wanting to get out, and I think cabin fever is about to go boom, folks. And once this pandemic starts going on or coming off and people start getting out there and traveling, I think that we could see the roaring 20s here again in the roaring 20s of the 2000s, all right? Okay, so Bitcoin coming off a little bit today. We talked about Coinbase, right? Coinbase opened up the digital wallet. All of the meme coins, folks, like the Doge, DOGE, which is doggy coin, all of these coins that really don't have a whole lot of infrastructure to back their pricing, whereas like Bitcoin has a limited number of coins that will be released. Doge, not necessarily, but all those meme coins are going through the roof today as the crypto craze is in full swing. Well, we're seeing gold futures move higher here, back into the 1700s the last couple of days after testing our value area low and maybe even 1650 there. Not quite getting that low, but we were looking to approach that. Now, as soon as I say the 1800s and the 1900s are out of the realm here, what are we doing? We're clawing our way back up there. So if we can get through this little trend here where I put on the bars, that doesn't really line up with a Fibonacci, but I did find some support areas that I thought would be key. I think that is going to be intact. Something to note though, we did get above this trend line yesterday, settled above that, and it was lining up right in line with our 50-day simple moving average. So we have kind of flipped from going bearish to basically midterm bullish here. So are we going to get above this line in the sand that we have for our support level? And it's right here where we're bumping up against it, 1780. If we can get above that, I think that 1800 might be back in. Now a settlement coming back down to the lows of the day obviously is going to make this look like a little bit of a toppy here. But one thing to note is we've broken that pattern of lower highs, lower lows. We've created a tweezer bottom here, which is very bullish to the upside, and we've broken this top here. So that has broken that chain. Now we should see a couple of waves of correction to the upside, generally speaking. You could say that there's probably 5 waves if you're looking at Elliott wave theory to the downside, and then there should be some recovery waves here. All right, so keep your eyes on that for gold futures. Bonds are coming off after yesterday's big rally. Remember, when we were on the daily market commentary, we came up and hit that 50-day simple moving average, the daily. And we were up about 2 points on the day. We did start seeing some weakness, but the banks are doing well because of this spread. We're talking about the interest rates on the long end of the curve going higher while the shorter end of the curve is very low, and that's the Fed fund rate. So when you think about the banks, they're borrowing at very low interest rates and they're loaning out at very high interest rates, and that spread is really widening, okay? So that's why they're making that money. We all hear about yields curve flattening, steepening, all of that kind of stuff. More flattening going on right now, and that's where the banks are starting to make their money, is on that rotation there, or on that flip. The VIX is slightly off on the day. We're back in the teens. Are they here to stay? Well, with equities moving at all-time highs and nobody seeming to worry about any type of downside, we could continue to see that VIX start to come off. Now, to me, that is a red flag to be cautious. But we have the NASDAQ in positive territory. We were seeing NASDAQ struggle as the Dow Jones was really making a move to the upside, but we can see that NASDAQ wants to join the party and moving to the upside as well, making a new all-time high today, as we all are in equities, I guess. Not all of my stocks seem to be doing so great, though. I'm having some... what was it? Gumbel is coming off. So anyway, we've got the Dow Jones Industrial Average up 100 points on the day. Again, could be if we settle at 3,400 in the Dow Jones Industrial Average. Now, keep in mind, we are looking at the futures here with me on these charts, but the Dow Jones could finish on the index above 34,000 for the first time. E-mini S&P is up almost 10 points on the day, again making new all-time highs. Happened during the day session, and then we started getting some correction happen as the bells probably went off. But now I think we're starting to recover, and I don't think that we're going to see the weakness into the close like I've talked about in the past, I don't think there's a whole lot to worry about heading into this weekend necessarily. I think that we're going to see some strength and people probably getting out. So coming into Monday, we'll start hearing about people getting out and doing things. As a matter of fact, I went to a very small wedding last night. I think there was only about 25, 30 people there, and people were not wearing masks. So I am in Arizona, though. So they were pretty open about that there. All right, and that's about it. That's all I've got for you guys. I hope everybody oh, no, let's talk about my trades, all right? All right, so Cisco, folks, on the 30th, we got this topping pattern, or actually on the 29th, we got the topping pattern. On the 30th, I got confirmation, so I added some bearish deltas to my portfolio, both in my IRA and in my trading account, and I went into the June and bought the 50 puts in there for... I had it up and I forgot what my price was. I had a note here for myself. And, I started getting sidetracked. Excuse me. I think it was $1.89 is what I believe it was. If I can get to it quickly. So I did the June 50 puts. I paid $1.89 on that. Obviously, volatility was at extreme lows here. I've tried to take advantage of some volatility expansion. Now, I did get a little bit of volatility expansion coming into today on that big pop, but the directional move did not help my position whatsoever. So anyway, I bought them for $1.89, sold them out for 93 cents this morning on that break above this technical area. Now you can see I was tested on it before, but I looked at it as tweezer tops. We blasted above that today, so I'm out. Now, if this were to make a settlement very near the lows, I might actually re-enter this trade because that would be a nice little technical setup also. We got this little gap higher, new all-time high, finished near the lows. That would create a spinning top doji there, and I would look to see that market come back again. So I'm going to keep my eyes out for it. I'm not completely hating on this bearish trend or bearish correction here in Cisco. So I'm going to keep my eyes out for that and keep it on the radar. And then the other one, Goldman Sachs, we talked about this. They came out with better than expected earnings. Morgan Stanley very similarly crushed it on their earnings. I was expecting Goldman to get a little bit more push to the upside with that, but also something to note here. Let's just talk this trade through for our swing trade setups. Now, when we're looking at a trade like this, and we can see where we get a little bit of support, swings start to happen here, that's where I'm looking to get involved in a trade like this. So my marker does not want to work with me today. Let's go with that. All right, so let's take a look at this. So on the 30th, basically, is when I entered this trade, which was based on the technical setup we got on right here. So on the day before their earnings, we saw this bottoming pattern, came down, hit the 50-day simple moving average. So we got a chart setup where we are looking at a doji. Anytime you see a doji like this at the bottom of a pattern, it doesn't matter, and in our case it kind of looked like this in a sense, but that as a signal of the bears and the bulls are meeting, okay? And when it's red, it kind of signals that the bears are winning, but anytime you get that push back, that strong close, that is a signal of bullishness and coming into the market. And then we got the confirmation, and our doji kind of looks kind of wanky there because I can't draw, but kind of like that. Now that is confirmation of a bullish move. And then you've heard me talk about this before. You know, you get a little worried when you see a pattern like that now, because that kind of makes it look like, okay, well, now it's topped out, but now you get the counter opposing. And anytime you get a counter opposing doji setup like that, it usually signals that the market's going to continue higher. And that's just like candlestick theory there. As the bulls and bears are battling it out, they're filling in some of this volume in here. All right, so I still am bullish on this trade. So I went in with the Goldman Sachs trade. I did this super small, folks, trying to keep my portfolio allocation nice, and it's getting a little long in the tooth, to be quite honest, with a lot of the trade. I have a lot of different stocks in there. So I did this one a little bit small and went into the July and bought the 290 calls in there. So here, I'll just write it out. I went into the July and bought the 290 calls. All right. Now I talked about those are the in the money ones. And in this webinar, I talked about there's intrinsic and extrinsic value in the options when you're talking about in the money options. The intrinsic value is what that option is really worth. The extrinsic value is the theta decay and the time decay, okay? And what we're trying to do with this strategy is pay off all of that external theta or the extrinsic value of my in the money option, okay? So I do that by going in the nearer duration and sell the May, and I sold the May to create the spread, the 360 calls. So the width of 360 calls. All right, and I did this for a debit of $51.03. All right, so that was my debit. So my break even on this trade, you add in the calls plus my debit I paid, that's the break even on this trade when I put this on, and that was basically 341. You can see obviously the market is a little bit lower than where I put this trade on, but I'm still playing it obviously to the upside. If I break below this technical bottom here or break below, actually that 200-day simple moving average is really where my out is, because the simple moving average is kind of going to be like a trailing stop in a sense. So I'm going to use that as my out on that 50-day simple moving average. So in this trade, long, synthetically long, Goldman Sachs at $341.03. Now, if the market goes up there and trades 360, that's where I'm getting out of this, folks, okay? So I've set this up according to those rules that I laid out in the webinar. Obviously, don't have enough time to go over this in this video. I'm already running long, right? And so check out all the rules that we talked about in setting this strategy up at protraderstrategies.com. And take a moment to go over our disclaimer, as we're an educational company, folks. I'm not here to try and get you guys to do these trades that I'm doing. I'm using this as examples for you folks to find good opportunities using options, all right? All right, and increasing your probabilities of success. So if you like this video, taking anything away from it other than the fact that it was kind of long, smash that like button for me. I appreciate it. Gives me a little bit of feedback. Also, if you have any questions, comments, I'm happy to make sure you're clear a concept. So please comment down there. I'll go back and forth with you down there to make sure everybody is on the right page. All right, so without further ado, I hope you guys all have a great weekend. And if you can't take that, take it easy.